Hello everyone, I'm Kichiro Suda, President and CEO of Unite and Grow Inc. Today, I'm pleased to present the third quarter report for the fiscal year ending December 2024. First, let's look at the financial highlights. Net sales reached an all-time high this quarter, driven by an increase in our shared IT professionals and improved utilization rates. Furthermore, the number of client companies affiliated with active members continues to grow. In the third quarter, net sales totaled 2,158 million yen. This figure represents a 12.3% growth compared to the same period last year. Operating profit was 277 million yen, reflecting a 9.8% increase from last year, while net profit for the quarter reached 304 million yen, a notable 64.9% year-over-year rise. Let's examine the quarterly trends in sales and operating profit. Sales increased by 5.3% from the previous quarter, setting a new record. On the right side, you'll see that the rise in utilization rates and unit pricing drove an operating profit margin increase of 7.6 points compared to the second quarter. Here we have the performance of each segment in this table. Currently, we disclose two segments: Shared Corporate IT Services and Shared Corporate IT Development, both showing steady progress. Now moving on to our business KPIs. On the left, you'll see the trend in the number of shared IT professionals. Since the fourth quarter of the previous fiscal year, our team has grown by 21 members. Though there was a temporary dip from the second quarter due to 10 employees taking maternity or childcare leave, a positive trend for our internal culture, but it led to a short-term decrease in active personnel. On the right side, the graph illustrates the steady growth we have achieved in our client base. The number of active clients increased by 13 year-over-year and by 3 when compared to the previous quarter, while the total number of supported companies, including subsidiaries, rose significantly by 37. In the left-hand graph, you'll notice that hourly revenue per shared IT professional turned upward compared to the second quarter, thanks to the contributions of our new graduate employees. The right-hand graph illustrates the upward trend in utilization rates, as our new graduates continue to perform smoothly. With an increase in client companies affiliated with active members, the average number of shared IT professionals per company has risen year-over-year. The factors impacting operating profit for the third quarter are shown in this graph. The growth of shared IT professionals and the rise in utilization rates have positively impacted both sales and profit. While the addition of new graduates has been a significant achievement, it initially lowered the gross profit margin due to a drop in operating unit prices and an increase in costs associated with higher salaries. We've also seen a rise in SG&A expenses from expanded recruitment and core system investment. Nevertheless, we managed these costs, achieving a 24 million yen increase in profits. This table outlines our forecast for the fiscal year ending December 2024. We expect sales of 3,071 million yen and net profit of 460 million yen. The breakdown by segment is also displayed. On the far right, you can see that the Shared Corporate IT Services segment has a gross profit margin of 37.1%, while the Shared Corporate IT Development segment stands at 41.4%. The graph here presents our forecast for factors impacting operating profit for the full year. We anticipate further growth in shared IT professionals and utilization rates, supporting sales and gross profit. We also foresee increased SG&A expenses due to intensified recruitment efforts, educational and training expenses, and new core system depreciation. Despite these additional costs, we project an annual operating profit increase of 96 million yen. Finally, regarding shareholder returns and midterm investment strategies, we project a dividend of 24 yen per share for the fiscal year ending December 2024, up by 2 yen from our initial forecast. With a target payout ratio of 30%, we aim to continue delivering stable dividends. This concludes our third quarter report for the fiscal year ending December 2024. Thank you all for your ongoing support.